Tomea, however, is a new business owner. So she has no historical data to draw from, and that's okay. Some of you are not new business owners and have no historical data to draw from because you're not doing your bookkeeping. But I'll fuss about that on a different day. Tuning in. I am a certified Christian business coach and consultant, tax strategist for entrepreneurs, and a strategic partner to help you build synergy in your business with bookkeeping. I empower Christians to achieve freedom with virtual service-based entrepreneurship. How to pay yourself as an LLC is the topic of today's video. And today's video comes in part to a question submitted by Tomea of Radiant Events and Décor in Oklahoma City. I wanted to speak to her direct situation because it's very similar to a lot of you. She has a full-time job and she operates her business part-time. So I'll deal with the question of today's video and then I'll address her specific questions. The questions are focused on single member LLCs that are not taxed as a corporation. And so the question, how you pay yourself as an LLC, it's easy to answer. You write yourself a check from the profits of the business. So if you made a profit of $2,000, you can write yourself a check from your business bank account for $2,000. Of course, we're in the 21st century. You can actually transfer the money from your business account to your personal account. And that's simply how you pay yourself as a single member LLC. But her first question, I guess, or the first part of her question was how much to pay yourself. And I guess in part I did answer that, but I think she is wanting to know exactly what to pay yourself on a consistent basis. Well, that answer is derived from bookkeeping. And this is really a guesstimate. And the best guesstimate is from historical data, which is bookkeeping. Tomea, however, is a new business owner. So she has no historical data to draw from, and that's okay. Some of you are not new business owners and have no historical data to draw from because you're not doing your bookkeeping. But I'll fuss about that on a different day. So there's 3 steps to answer this question. The 4th step actually answers her second question. And so step 1, you need to really determine costs. First, determine the fixed costs. These are the expenses that you will incur yearly or monthly. These are the costs that will incur even if you don't make a dime in your business. So like website hosting, domain, insurance, bank fees, etc. Figure those amounts and add them together for your fixed cost over the next 12 months and divide that number by 12, and this is your estimated monthly fixed expenses for the next year. Right? And so we have that number. The second part of step 1, in Tomea's case, she purchases decor items in which she rents out. So she'll need to calculate how much that she has already spent, as well as set a budget for the next 12 months and add those amounts together for an estimated equipment cost. Then divide that number by 12, and what you will have is an estimated monthly equipment expense. Right? So this is the amount monthly that you in part have already used, but you're setting it aside to make those specific purchases through the next 12 months. Okay, and now add your monthly fixed cost and your estimated monthly equipment costs, and this total is your estimated monthly expenses. And so we took expenses like the equipment that you would purchase once. You are actually establishing a budget for it and then breaking it up over the month to the 12 months in order to account for it, right? And so we have, again, the monthly fixed costs and the monthly estimated costs together is estimated equipment costs together is the estimated monthly expense, right? And so step 2, you want to figure out your revenue. So you have the rentals and you have events. So figure out how much you plan to make in a typical month based on your services and your rentals. And this is a rough guesstimate because there are going to be some months that are more event friendly than others, right? So Christmas time, you have companies, you have individuals that have Christmas events. Valentine's, February, you may have more events. Depending on when Valentine's is, you could have some the weekend before, the weekend after. Graduation time, you may have more events. So there are going to be some months that are more event friendly. So you can plan out your revenue for the next year or just establish what a typical month is like. And so let's say that you have 4 events per month, an average $500 from each event for $2,000 a month in revenue. I don't know what your actual numbers are. I'm just kind of throwing these out for an estimate. So with this estimate, 4 events, $500 each, $2,000 a month revenue. Okay, and there may be some other expenses that are associated with those events, but we're talking, I'm talking profit from the events and not revenue. So you may have to hire some people, blow up balloons to, depending on, I don't know how involved you are in events, work at the events, but I'm talking about, I've said revenue, but I'm really talking about your profit from the event, right? Those direct expenses with those events, you know, you have to take those into account, but we're just talking about profit from events. And so we have your estimated monthly expenses, we have the revenue. The third step is to figure out your profit. And profit is revenue minus expenses, and that will give you your profit. So the $2,000, the estimated monthly revenue minus what the estimated monthly expenses are will give you the estimated profit. Okay, and then take your profit and divide it by revenue to arrive at your estimated profit margin. Your estimated profit margin says that for every dollar in revenue that you make, this percentage will be profit. And so for the sake of simple numbers, let's say your total monthly estimated expenses were $1,000. Your revenue was $2,000. You subtract the revenue from expenses, the profit is $1,000. You then divide the profit by the revenue and you'll come up with 50%, which means for every dollar that you make, 50 cents will be profit. Those are nice round numbers to deal with for explanatory purposes. And so this is an extremely rough estimate, and you will need to monitor this to see what the real numbers end up being. And so if you have bookkeeping over the course of time, then you can recognize certain months are going to be better than others. There is going to be an average of monthly expenses that you can look at for total, those fixed assets, as well as the equipment costs. Obviously, you need a budget to replace your equipment each and every year. Determine how long you expect those to last, set a budget in order to replace that equipment or to get more equipment. And then you will also be able to figure out what is your estimated revenue, your estimated profit per month once you have bookkeeping for at least a year. And then each year after that, you have a comparison to see your growth or where you are spending less in expenses, more in expenses, you're making more money or you're making less money. And so you have bookkeeping to help you really get more strategic on those numbers, right? And so this is an extremely rough estimate, and you will need to monitor this over time to see what the real numbers are. And so you have a budget for more equipment, but you are not spending it every month. You want to virtually set that aside every month for that particular expense. Okay. And so this gives you a rough estimate of what your profit margin is. And so you have an event on the weekend, you make $500, you know you could take $250 out to pay yourself. Okay, over the course of a month, you make $2,000, 50%, you know, you could take out $1,000. So our second question is actually one that I don't necessarily get a lot. And that is how much to set aside for taxes. This is probably one of the biggest surprises that first-year entrepreneurs make, is that they didn't budget for taxes, or they're not even paying their quarterly estimated self-employment taxes. And so taxes, again, this is a difficult number to place because everyone's tax situation is different. Even pricing for my tax services, I have to know information about your situation in order to give you a quote. There's no generic quote that I can give you other than individual income tax starts at this amount, right? But if you have a single member LLC, well, then it's going to jump significantly, being a business. If you own rental property, one property is going to be one price, 10 properties is going to be a totally different price. So there's no way for me to just say, hey, this works for everybody, right? The same thing with trying to figure out what taxes. However, generally, I see 18 to 24% in taxes. And I would suggest that you virtually set aside 30%. 30%. And so you make that profit of 50 cents on the dollar, $1,000, set $300 aside for taxes. That's what I would do. And this will do two things. There's two benefits in this, because I said 18 to 24%, then I said set aside 30. Setting aside 30 will do two things for you. It will give you a cushion for surprises. Surprises that come up in the business, or surprises that come up at tax time when you file. Secondly, it will give you a reward or bonus for meeting the numbers. And so you set aside 30%, you end up only paying, let's say, 24%. Well, that 6% difference now could be used as a bonus. And so you can use that to pay for your family trip during the summer, or, you know, other things. You can reinvest it in the business, or you can just take it out of the business, right? Because you built that into your business, your accounting, your bookkeeping. And so, again, this kind of answers the question, how to pay yourself as an LLC, how much to pay yourself, and how much to set aside for taxes. And again, thank you to Tomea of Radiant Events and Décor in Oklahoma City. You can look her up by visiting her website, radianteventsok.com, radianteventsok.com, or you can look up on Facebook at Radiant Events OK as well. And so I hope that you gathered something from this as I address her questions. And of course, if she has any questions later on, she can feel free to reach out and I will clarify any of this information. And I know it was a lot, but the numbers are there. So y'all have a great day.